Welcome back, savvy investors. Today we're diving deep into a strategy that's been a game changer for advanced real estate investors, the BRRRR strategy. That's BRRRR, spelled out buy, rehab, rent, refinance, and repeat. Not BRRRR as in cold. This is about generating warm, steady cash flow. Step 1, buy. The key is to identify undervalued properties with solid fundamentals. Look for areas with rising job growth and low vacancy rates. For instance, in Cleveland, properties are often acquired below market value, say a distressed single-family home purchased for $120,000 with potential for significant improvement. Step 2, rehab. This is where your investment starts to work for you. Conduct thorough inspections, obtain multiple contractor bids, and focus on cost-effective upgrades that maximize property value. In one real-world example, an investor spent around $30,000 on targeted renovations, improving kitchens, bathrooms, and curb appeal to boost a property's market value by 70%. Step 3, rent. Secure reliable tenants to create consistent cash flow. Implement efficient property management practices and competitive rent pricing. A stabilized rental can cover operating expenses and leave a healthy profit margin, making the property self-sustaining. Step 4, refinance. After your renovations have increased the property's value, get it reappraised and refinance. This allows you to pull out the increased equity, often 60% or more of the new value, to fund your next acquisition. For example, an investor in Indianapolis bought a property for $175,000, spent $25,000 on rehab, and then refinanced at an appraisal of $300,000. That's a significant cash out, fueling the next deal without additional capital. Step 5, repeat. The beauty of the BRRRR strategy is its scalability. Use the cash out funds to purchase additional properties, creating a cycle of growth. With each cycle, your portfolio and cash flow expand, leveraging market opportunities and advanced financing options like DSCR loans that focus on rental income rather than personal income verification. Now, let's talk numbers and strategies. Advanced investors often target markets with high cap rates, between 8 and 11%, and low entry costs. They use detailed market analysis, local MLS data, and platforms like the Scotsman Guide to identify the best deals. Financing options such as hard money lenders, DSCR loans, and even portfolio loans can offer the leverage you need to scale quickly and efficiently. Remember, the BRRRR strategy isn't for the faint of heart. It requires disciplined budgeting, detailed market research, and a keen understanding of financing dynamics. But when executed properly, it can multiply your portfolio and unlock financial freedom faster than traditional buy and hold strategies. That's the advanced breakdown of the BRRRR strategy. BRRRR, not cold, but pure gold. If you're ready to elevate your real estate investing game, it's time to rethink how you acquire, renovate, and scale your portfolio. Like, subscribe, and share if you're ready to build wealth like the pros.